Hi guys, it's Burp here and welcome to today's exclusivity report. And today, briefly, I'm going to lead you through a couple of timeframes analysis for Bitcoin spot price on Bitcoin USD spot exchange on Bitstamp. Weekly chart kicking it off. I think it's very important to understand that we have just closed the 9th consecutive candle close in red. This is the first instance in history that Bitcoin has had consecutive 9 closes on the weekly basis with red. So the question is, if it's already historically overstretched, if it's already a record-breaking long downside movement, then how much longer can it really stay downwards, right? If anything, I would rather vote for a mean reverting kind of like approach and contrarian basis, knowing and accounting for abnormal downside length of the movement, which, well, let's be honest, doesn't last forever. So if it had lasted for so long already, then the question is how much longer can it last? And in my eyes, to my mind, I think it's not going to last as long, as many people imagine, because of saliency. The saliency makes us think that just because the market has been going and sinking downside, to the downside, going south for the past 9 weeks, it's going to continue forever. And the longer it takes, the longer it stays downside, the more people really commit to this belief, right? And the wrong error they are usually. Historical fears, confirm this contrarian kind of like an approach with 10 points on a fear and greed scale, which is also kind of like relying on the fact that the majority is always wrong about anticipating the extremes, mainly because we all as traders undergo emotional and cognitive different, biases, faulty reasoning, a mistaken approach that basically takes lead, over any reliable logical idea. So here, while having still in the same pattern, one and the same pattern, failed on both ends now, with the fake breakout on top and a fake breakout on the bottom. If anything, I see a slowdown of the sell-off side, right? Smaller consecutive candles, the spinning top candles with longer, lower shadows, basically tells me that the short-term volatility has shrunk, and then this also speaks in favors of a potential reversal, because if the downside move kind of like slows down, right, and you start seeing more and more demand coming in, which is classified under the as the long weeks, longer candle shadows on the bottom, then this could potentially have mean reverting kind of like implications and get you to reverted back to the mean. So even seen on the 12-hour chart, which is my favorite one, right? And accounting for the main kind of like local pattern, you're looking at a something going, a sideways pattern, and accounting for the recent ATR, which is smoothed with a 3 EMA exponential smoothing average on top of it, a 14-day ATR here in the bars. You can tell that the volatility has significantly declined to the levels actually seen before the crash happened, before the Luna crash happened. So this tells me that the market has already recovered from its shock, from its PTSD shock, post-shock kind of like disorders, traumatic disorder, stress disorder, whatever you regard as. To its name, the fact is the market takes time to shake off the recent changes, to discount the denial in the market, right? As the people usually deny when first introduced some hard and harsh facts of liquidations and so on. So once the market takes time to recover, to kind of like shake off and then change the way of thinking, like admit the facts, right? The volatility has to come down a little bit, and it actually forms this sort of like a sideways pattern. And speaking of which, we have just seen the somewhat of a successful breakout on the 12-hour chart, right? While still sitting and residing in this overall resistance area, I would definitely want to see it, break through the main resistance at around mid 31,000s, 31,500s, if anything, right, before actually committing to full-time, bullish thesis leading into higher 30 or even $40,000 region.